Consumer and business confidence in the U.S. economy are plunging as the NASDAQ and S&P 500 fall into correction territory, defined as a price decline of 10% off the peak, which for both indices came only a month ago. The blue chip Dow Jones Industrial Average sits a hair's breadth above that level, while the Russell 2000, an index of smaller firms, is approaching bear market territory, defined as a decline of at least 20%. Bitcoin is also down 24% since its peak less than 2 months ago. All told, investors in the S&P 500 and the NASDAQ alone have lost $8 trillion in only 3 weeks. That's an enormous amount of money to evaporate from the economy in such a short time. I doubt that we've seen the end of the carnage. By the way, gold is up $50 over the same period. More evidence that the yellow metal in your portfolio is wealth insurance in white-knuckle times. It's tough to remember that just a month ago, stock markets were flying high at record levels. Inflation had fallen close to Federal Reserve targets, and consumer and business confidence were rapidly improving. But the specter of a global trade war has wiped out those highs. Threats to impose exceptionally high tariffs, followed by promises of retaliatory tariffs from our trading partners, have raised fear that the economy will fall into recession. The conventional wisdom today is that the odds are 80-20 against a recession this year, although some analysts place them as high as 50-50. I think it's impossible to give odds unless you know whether tariff threats will turn into actual tariffs, and only a few people inside the administration know that. The answer probably depends on responses to our tariff threats from our trading partners. The outcomes from this brinksmanship is unpredictable, with unintended and unforeseen consequences to be expected. It's a high-risk play with the potential for high reward, political or economic. I think the prospects for a recession depend on 2 contingencies. 1, whether the tariffs we have threatened but not yet imposed are ultimately imposed, and for how long. And 2, whether Congress and the President can prevent a debt limit crisis this summer and thereby avoid fears of a debt default. As I've said, the prospects for a trade war are impossible to estimate, but I believe the bigger wild card lies in a debt limit crisis. Accounts from Republican senators discussing the matter with the President are that he is not yet ready to turn his attention to the debt limit. One can imagine why, what with all the other balls he has in the air. The President's full attention to the debt ceiling will be crucial to finding agreement with Congress and avoiding market fears of default. It'll be a tough negotiation, too. The spending and tax cuts passed by the House would raise the nation's debt by at least $5 trillion over the next 10 years, according to the nonpartisan Penn-Wharton budget model of the University of Pennsylvania. That would place the debt in the neighborhood of $43 trillion. Other, more pessimistic projections put the debt 10 years from now as high as $55.6 trillion. Under either scenario, the burden of funding this debt will be an albatross around the neck of the U.S. economy, crippling economic growth for the next decade or more. With China increasing more debt to boost its failing economy, and Europe increasing debt issuances to fund higher defense spending to counter Russia, a tsunami of new debt will severely test the appetite of global markets for sovereign debt. When U.S. markets finally wake up to this reality, the economic consequences could be dramatic. A debt limit crisis this summer could be that wake-up call and the final straw that could send us into a recession. In recent years, the U.S. has been the single engine of the global economy, so a recession here is likely to topple the globe into a global recession. In such a hazardous environment, the world always turns to gold and U.S. Treasuries for safety. But Treasuries will be implicated in the crisis. So I expect gold to be the favored safe haven asset for people around the world.